G'day there. If you are looking to buy a house in the next year or two and you're trying to work out, well, how much mortgage can we honestly afford, then this video is absolutely for you, because in this video, I'm going to take you through the exact strategy that I use with all of my clients to help them work out what size mortgage can we honestly take on without putting any pressure on the household budget. G'day there, my name is McGilvray. I am a financial coach, financial well-being consultant, and founder of the Money Boss movement, where we make practical, life-changing financial education both understandable and accessible for everyday people. And in this video, we are looking at, well, how much mortgage can I honestly afford? Unfortunately, I see all too often people relying on what their bank will lend them as an indicator for how much mortgage can we actually afford. But 30 years of financial coaching experience has taught me that what the banks are willing to lend you and what you can really afford without putting any stress on a household budget are two very different things. So please do not make the mistake of just relying on, will the bank lend me the money or not? So what I want to take you through is the exact process that I use with all of my clients. And over the past couple of weeks, I've had 5 or 6 clients, in fact, come to me asking, well, Phil, can you help me work out, firstly, how much we need to save to buy a house, and secondly, how much mortgage we could realistically afford. And just last week, I created a video. You can get it by clicking on the link above, or there's a description there's a link in the description below. On, well, what are all the costs associated with buying a house? Like realistically, if we want to buy a house, what are all the costs that I need to consider? So I created that last week. So please have a look at that because that is going to help give context to today's video. So I'll quickly show you, I took you through a case study of one of the clients last week in that video that I'm actually working with at the moment. They want to buy a $900,000 house. So we went through and looked at the 4 big costs associated with buying a house. The first one is, okay, well, if this is the value of the house, a $900,000 house, what sort of deposit do I need? And so we worked out, based on a 20% deposit, you're going to need $180,000. So they're going to need $180,000. That's the first cost. And then we've got all the purchase costs. So these are the second cost. Purchase costs being things like your stamp duty. If you don't have a 20% deposit, you're probably going to end up paying lender's mortgage insurance. But things like building and pest reports, legal fees, loan application fees, etc., etc. You really do feel like you're leaking money as you go through this process. But we can see that for these guys to buy a $900,000 house with a 20% deposit, they're going to need about $209,000 just in the deposit and purchase costs. But on top of that, this third set of costs we need to consider are things like your moving in and settling cost, which really do add up. So you can see we've allowed about $4,000 here for things like removal costs, restocking the pantry, restocking cleaning fluids, and then connection fees to all the utilities, etc. And then that's the third cost. And then the last cost that most people neglect, and I just implore you not to neglect this, is leaving yourself with a cash reserve of at least $10,000 to $20,000 so that when the unexpected occurs in your new home, you will have money there to cover you, because things do happen. I would say at least 50 to 60% of the time that I see my clients moving to a new home, there is something that does not work, or some kind of problem with the plumbing, some kind of problem with the heating or the cooling, or something that ends up costing a whole bunch of money. So please go through and watch that video as I take you through that in more detail. Because what that'll help you do is go, okay, if I want to buy this house at this price, I know I need this much to save towards. What sort of mortgage is that going to leave me with? And you can see for these guys down here, it's around $720,000. So then the question moves to, how much mortgage can I realistically afford? Can I afford a $720,000 mortgage without putting too much stress on our budget? And so what we do then is we move over to their budget. So all of the clients I work with, we get them set up with a budget to start with so that we can clearly see, here is what my monthly income is. Here is what I need to allocate to all my expenses on a monthly basis so that as those expenses turn up, the money's there ready to go. And for these guys, their current scenario is that they have an income and monthly income of around $11,841. And their average monthly expenditure is $8,544. Now, they are currently renting. So if we have a look at how much they're spending on rent, we come over here, we come to utilities, and we can see here that at the moment, these guys are paying $500 a week in rent, so $2,172. Now, one of the biggest mistakes we make when it comes to buying a house is often we'll go, well, I'm paying this much in rent, so if I can get a mortgage for around that, then I should be okay. But the problem is when you take on home ownership, there is also a whole bunch of extra costs associated with home ownership that you don't have when you're renting. It's not just about the rent to mortgage comparison. There are things like your rates, your maintenance, your extra insurances that you are going to have to think about. So what we did with these guys is using the Grandma's Jars budgeting tools, we went over here, we've got a mock budget feature. We set up here we set up a buy a house. And what this does is it duplicates their existing budget. So this is their existing budget on the right-hand side. And on the left-hand side, we can then start to play with some of these numbers. So what we did was we clicked on their income stays the same. So we clicked on Adjust Mock Jars. We went into here. We went into Utilities. And what we did was we took out the rent and put in the mortgage. Now, we'd used the Grandma's Jars mortgage calculator as well, which you can find under Grandma's Jars resources here. But the mortgage calculator allowed us to go, okay, if I've got a $720,000 mortgage over 30 years, so 360 months, at 6.1%, then what is my repayment going to be? And we can see here it is $4,363, which is a lot more, almost double what they're paying in rent at the moment. So we took that figure there. We went back to the Grandma's Jars. Let me just come back to the mock budget here. We changed the rent to mortgage of $4,363. We also added water into the equation because often as a renter, you don't pay that or you don't pay all of it. And we also added rates. So rates we've got to pay into that equation as well. And the last thing that we did was we added in house and contents insurance into the equation. So we've got contents insurance in there. And we also upped the household spending. Typically, your average household, you need to allow around $250 to $300 a month for just stuff around the house. Household maintenance, household items, gardening, all those sorts of things. $250 to $300 is about the average figure. If you've got a pool, it probably needs to be $50 to $100 more than that. But once we've been through this process, and we just go back to mock budget here, you can see once we'd added all of those expenses into the equation, they're in a situation where they go, wow, this is really tight. On average, they would still have a $511 surplus. So that's down from $3,296. But on 2 pay months, so this is what the minimum monthly deficit means, is that on a month where they only receive, if they get paid fortnightly, only 2 pays, or if they get paid weekly, only 4 pays, they're actually in a deficit situation, which is not ideal because ideally what I would like to see, and with anyone that I do budgeting with, what we really want to see is that on a 2 pay month, if you get paid fortnightly, or on a 4 pay month, if you get paid weekly, we would like to see a $500 surplus, at least a $500 surplus, because even the best budgets leak at times. Unexpected things come up, and we need to have some buffer in there to cover those unexpected things when they do occur. So these guys right now are about $700. So if we turn that into a positive 500, they're about $719 away from where I would really like them to be to be able to afford this home. The other thing that we need to factor into this equation is that we did the budget. So if I come back to the mortgage calculator here, we worked out the budget based on a 6.1% interest rate, which is currently where it's at right now. And yes, we are hopeful that interest rates will go down from here. But the problem is, what if they don't? There is a very good chance that at some point in the near future, we will actually see interest rates go up. And if those interest rates go up, you do not want to be in a situation where, 1% rise in interest rate is completely going to blow your ability to afford this mortgage. You want to factor in at least a 2% increase in the interest rate. So if I change that to 8%, and we look at what that does, you can see that has now changed that mortgage there to $5,333. So if I come back to their budget here, and I adjust this, go to utilities, and I change this figure here to be edit 5,333, and oops, that there, and just go save expense. What this is going to show, if I go back to mock budget here, you can see now that they've got on a minimum monthly income, they've got a deficit of $1,189. And what I'd really like to see is this is positive $500. So that means they're about $1,700 per month away from confidently being able to afford this mortgage. So a number of things need to happen in that equation. Either their income increases, or their expenses need to decrease, the rest of their expenses need to decrease, or they need to take on a smaller budget, a smaller mortgage. So I'm hoping that this makes sense. The process, and I hope you can see that the process is actually very, very easy. All you need to do is identify what are all of my expenses, break them down into a monthly figure. So you figure out all your expenses across the course of the year, break it down into a monthly amount. So an annual amount divided by 12 to bring it down to monthly. If it's a quarterly, divided by 3 to bring it to a monthly. If it's a fortnightly expense, times it by 26 and divided by 12 to bring it to monthly. I've got some worksheets that will help you do this if you'd like a copy of that. So bring it down to a point where you can have this apples to apples comparison of here's what I earn on a monthly basis, and here is what all of my expenses, here's what I earn, and here's what I am spending on a monthly basis, so that you can clearly see, we can take out rent, we can add in the mortgage, we can add in the rates, we can add in the extra household expenses, we can add in contents insurance, building and contents insurance, so that we can now make a direct comparison and see, can I truly afford this? The one thing that I would say to you is that, and again, from 30 years of financial coaching experience, is no house is worth an oppressive mortgage. It just puts so much strain on your life if you are constantly having to work so hard just to maintain the mortgage. I so often hear people say, I work so hard, but I never ever get to enjoy any of the money that I earn because all of it goes into just living and surviving. That is not a good place to be. So please make sure you do your homework first. Please make sure that you've been through the process of identifying what all your expenses are so that you can then have a framework to then decide, can I actually afford this mortgage? Hopefully this has been helpful. If it has, please click the like button. Can I also encourage you to click the subscribe button, because every week I release videos with practical life-changing financial education that makes doing money so much easier. Small strategies, small habits, easy habits that can literally make $1 million difference to your future. So please click the like button, click the subscribe button, and don't forget to check out the video that I did last week on what are all the costs associated with buying a house, so that you can then have the first piece of the puzzle to work out, well, how much mortgage am I going to need? Take care, and I look forward to seeing you in the next video.